Hello and welcome to Stockwatch, presented by me, Evan Lucas, for Go Market Securities. As always, please have a very read through of the disclaimer on screen. Everything in this video is general in nature, none of which relied upon as any form of personal advice. Go Market Securities does not know your personal scenario nor your personal financial goals, and therefore none of which relied upon as any form of advice at all. It is just general in nature only. Banking earnings season started. NAB. So let's go through what they've done. As expected, it was pretty bumper in terms of what you saw. So cash earnings up 17% to the first half all the way to the close in March 31st to $4.07 billion. They gave you a dividend of also 83 cents compared to 73 cents in the last half. But both of those are a miss. Expectations were for 4.2 billion on the cash earnings and for a div of 86 cents, which is a little bit under when this market is demanding you get it absolutely picture perfect in terms of what you do. If you look at it, business banking shed about 0.4% to $785 million. It means that what they are doing and showing is that they are trying to start targeting the market parts of their business that actually matter, and that is personal lending, and that is also their business make on that, and having a look at their home loan business, which they have been monstering others at, barring CBA. They did moderate. They haven't gone as hard as they have. They haven't hit the competition button like they have over the last 4 to 5 years. They've slowed it down. So cash earnings were nice there, up 10.5%. In fact, it was almost near enough to 12, but not as strong as what they were. But you can't go past their business banking, which was incredible, coming in at $1.2 billion in those numbers, growing at about 19.9%. It just shows that they are the powerhouse in business banking and have been for about a decade and a half. They've always made that very, very clear that that's what they want to do, and that came through in their numbers. So what did that mean for net interest margins? The thing that we always look at inside of it, it is up, and you would expect it to be up. Earnings from increased interest rates was always going to be there. So net interest margins up by 14 bips to 1.77. It's pretty reasonable. Better higher interest rates, partly offset by lending competition, but not as much in the past. So that's why it was good overall. And cash earnings and that CET at 13.7%, that is also very, very strong. You know, it's up from 12.2. So overall, it's a good number. It's a good result. They're also therefore starting to talk about the economy. It's not normal to see this, but you know, Ross McEwen is very strong on this view that you need to be talking about it. And NAB has said that they believe that they're probably at the peak and that there are signs that inflation is moderating the right way. They also make it very clear that bad and doubtful debts, although it's gone down as a whole from about 0.95 down to 0.66, that's all well and good. It's in the home loan numbers that if you actually have a look, they're starting to see a tick up where they're actually starting to see it move to 1.22 and their arrears. Now that is below, significantly below their 10-year running average in that space. So that's a good thing to see, but it is starting to move. The other chart that was very eye-catching that I think I need to finish on was their fixed rate variable mortgage roll-off. The majority starts now. The peak of it hits in September. And that will be the big question about whether or not the numbers that have done for the first half are sustained in the second, as bad and doubtful debts will clearly be impacted as some of their home loan players not only just double in their monthly repayments, but as some places much as triple. Watch that space.